Good morning. I'm Zev Fema, research analyst for Action Alerts Plus, joined on the floor of the New York Stock Exchange with the man, possibly the simulation, represented by a dollar sign.
Yes, and
Jim Cramer.
I never mind any description that allows me to be focused.
There you go. So Jim, let's dive right into it. This morning you were breaking down the acronym BRIC. Can you tell viewers what that means?
Well, there was a fellow by the name of O'Neill who used to be a strategist at Goldman, and he put out that, look, the great emerging nations are Brazil, Russia, India, China, with the notion that that's where you're going to have to put money and build your business if you want growth. Because
thinking emerging markets, that's
right? Because the United States is not growing fast, and one by one those fell apart. And now it's China's turn. And if you had Brazil initially, that was great. If you had Russia initially, that was great. If you had India initially.
India's tough to get into.
India, well, companies. There's been a series. If you Google Apple in India, you're going to see articles which just say it's been a failure for Apple.
And then Walmart was trying with Flipkart. You mentioned in your piece.
Spent $16 billion on Flipkart. We don't hear much about it though, right? Yeah, it's interesting. You usually hear things when they're good. And then finally, the two I key on is Emerson, which tried to make their growth, not that their growth delta, so to speak, and 3M were both China. And do you think it's really a coincidence where those stocks are? So, I mean, that matters tremendously. I'm not talking about Wynn and Las Vegas Sands. I mean, they're the casinos. They're going to be in Hong Kong.
Macau.
I'm talking about building plants and having big businesses in China, and how that is no longer something we want to pay up for. If anything, it's a reason to, if you're trying to mimic the S&P, what you would do is you would say, okay, listen, I'm going to be in all the S&P except for companies that need China to make their numbers. And then you can get rid of those and you might outperform. Others might short those versus the S&P. All those are happening. All those things are happening.
That's something to keep an eye on. Get over to real money. Jim's breaking it down even further. Let's come back domestically real quick. 2 nights ago, not last night, the night before, we get 3 rate cuts out of central banks internationally, and that sent the 10-year plummeting. Jim, that causes everyone to kind of worry, is a recession on the horizon, but is this sort of the boy who cried wolf with the 10-year?
Well, no, I mean, what it is that there may be something always lurking that we don't see yet, but it's not, when you have job growth, when you have claims today, which are incredibly low, it is very difficult to see a recession. Now, here's the new commentary that I get. Well, Jim, in 2008, we didn't see a recession coming. And I say, well, wait a second, what do you think my rant was about? It didn't see it coming. I mean, and then people say, well, Jim, you obviously didn't see it coming, or you would not have, said something positive. I've seen a lot of crazy stuff. Things were very structurally bad. I went to Jamie Dimon yesterday to get credit figures. The consumer is so liquid. It's amazing.
Right, and then the lower 10-year, I mean, everyone's freaking out because of inflation, recession, but if you live in America, you want these lower interest rates, right? If you're buying houses, if you're buying cars, if you want to refinance.
We're not an export-driven economy. Why are we not an export-driven economy? Because China and other countries, Spain, Mexico, Korea, have targeted our industries, and our industries went under. A lot of our companies, in order to make their numbers, moved. And that's been the prevailing theme since the 1970s. Remember, we used to have 900,000 people involved in textiles. Now we have almost none. I mean, that was the kind of classic job that we lost overseas. And it was our own companies just abandoning a country. I had Tandem Diabetes on last night. I said, where are you making those great pumps? San Diego, they said, listen, we can't afford the quality problems of building overseas. And that's something that Dan D'Amico has been saying, former CEO of Nucor. Like, listen, we should not be using their inferior steel. These are in China. So there's a lot of cross currents that says that if that you do not want to use capital flows and where the 10-year is necessarily a good judgment of where our economy is. And then the next canard is, well, we can easily import a recession. Well, yes, if we were 30% consumer and 70% industrial, absolutely. Now, then there's another scan of thought today which says that rail car loadings are weaker. Well, I mean, no kidding. That's concomitant with China, but also you have to be careful because oil drilling, which uses a huge amount of oil and oil drilling, going down in the country, and that's a huge amount of transport. So let's not give up on the economy because of the 10-year.
Right, and also just real quick, because we have mentioned this in the past, there's kind of this split between the industrial economy and the consumer economy. Consumer's still pretty strong. We've been trying to take advantage of it for Action Alerts Plus.
JP Morgan says that the consumer is accelerating spending this year. yeah, we have been picking stocks that
Yeah.
that mirror that. And I'm
Right, and
proud
we,
of what we're getting.
and also with the back to the 10-year, we've been using that to our advantage, looking for those stocks that are maybe yielding a little bit too much because they're selling
Right.
off of that, going for the high yielders.
And we can talk about that on our video.
Right, and then so Jim, not an Action Alerts name, but that's all right. We're on the free anyways. Let's talk AMD yesterday,
Well, Lisa
announcing the new
Su,
chip.
I mean,
Google, Twitter,
Yeah,
clients.
Lisa Su is just a. By the way, Eric Johnson with a fabulous piece.
Oh, that's amazing. Let me actually
That's
say
what
that
people
real
have to
quick.
go
He's
to.
interviewing Lisa Su. That's going to be on
Wow.
TheStreet.com later today after the close, so be sure to check that out.
I know that Lisa respects him more than any other reporter, and this is just better chips, better mousetrap, better chips than Intel. Winning big business that might have one time been Intel's, stock goes higher.
Yeah, absolutely. And let me just say, I mean, we read a lot of sell-side notes. If you read Eric Johnson's stuff, you're going to know as much as anybody.
Oh, yeah.
So definitely check that out. Let's switch over real quick. Lyft reported good numbers last night.
Stock of the day. Look, I think Lyft is one of these companies that is growing into being an ecosystem. At the same time, they're trying to cut their burn. This is a company, and Uber, I said, and I was wrong initially, but I've said, listen, these two are the winners in the space. And when you have a duopoly, they tend to, like if you look at what happened to the canning business, when you look at what happened to the airline business, when you get these oligopolies or duopolies, they can raise their price.
Right.
And that's the next thing that's going to happen. So I remain positive on Uber. I've been positive on Uber because they're great management. And I think that now Uber's up, unfortunately, ahead because of Lyft. But if Uber can prove itself to be not a cab company, but an ecosystem, and with Uber Freight, which is really good, Uber Eats, then I think that people are going to realize that, you know what, 45 wasn't that bad a price to come public.
So let me just ask real quick, though, because we are running out of time. Now, Lyft's lockup expires August 16th. You have been warning that this flood of IPOs is something that's going to suck up capital to send down other
And
stocks.
that's when
Is
the
this
lockup
unlocking?
Yeah, that's going to be
another
problem.
issue to pay attention to?
Yeah, you really got to focus on supply because as much as these deals have been out there, they have not tipped the supply. And you take a look at Beyond Meat. They bring a couple million shares public that was locked up, and the stock is now all the way almost back to where it was when where they priced it.
Right.
So just be aware, more supply is not good.
Right, and we also have the We company. They're also coming online. They moved it up. So that is something investors have to keep in mind. All right, Jim, that's all the time we have for today. For those of you watching on Facebook or TheStreet.com, we're now jumping over to our Action Alerts Plus members-only video where we're going to dive into all of our holdings, what
and
we're
what we
doing
would
for
buy.
the trust, what we would buy. So be sure to check that out. I'm Zev Fieman for TheStreet.com. See you tomorrow.